Let's go down to Warren Buffett. We've been really paying attention to this because it could be a signal, some major warning signs in the economy. Let's put this up there on the screen. So a lot of financial news outlets have been taking note of this. Warren Buffett is currently trying to reassure his shareholders over his record amount of cash. The amount of cash is actually so stunning that it's literally, the letter shows a cash pile grew by just $9 billion in this quarter. The cash pile has now hit $334 billion at the end of last year, with an additional increase. Percentage-wise, looking at the entire history of the amount of cash and cash equivalents on the Buffett books, there has never been this high. And it's really interesting because of a question of why. So what Buffett says is that Berkshire shareholders can rest assured we will forever deploy a substantial of their money in equities, mostly American equities, although many of these will have international operations of significance. But the reason why he pointed to the amount of cash in his letter, Crystal, is that he is saying, basically, he thinks that there is a massive overprice of assets in the economy. I actually read a book about Buffett. He's an interesting figure, kind of worshipped sometimes a little bit too much in my opinion, but the thing is that he's of the old school in terms of analyzing stocks, trying to make sure that the multiples fit with that. Whenever he sees a misprice, that's when he buys. And that style of investment going back over time has obviously made him tremendously wealthy. For him, he sees significant imbalance currently in the economy, holding cash to be able to buy assets for presumably what he's saying is some sort of crash that's in the future. Now, is he correct? I have no idea. These guys are wrong all the time. But obviously, he's one of the most successful investors literally in American history, so we should all pay attention. And looking back to all the stuff that he has done previously whenever he's held cash, he's come out pretty well on top whenever he bets on something being overpriced. And that's kind of the foundation of his entire like stock analysis going back for decades.
This is the most amount of cash that Berkshire Hathaway has ever held, like quite by a fairly significant margin. So that's something to pay attention to. Something I had noticed before is actually a bunch of billionaires have been dumping stocks. So Bezos has been, Bill Gates has been, Zuckerberg, I believe, Ray Dalio, like
Alex Karp. He just sold a huge thing, Palantir.
A bunch of billionaires are mitigating their risk and exposure to the stock market. And, you know, that's, I think, something to pay attention to. One of the reasons why we cover DeepSeek so extensively is because our stock market is so dependent on this just handful of tech giants. They are responsible for a majority of the growth in our stock market index over the past couple of years. So if their AI projections do not pan out, either in terms of their ability to corner the market or in terms of how impactful AI ends up being, then there could be a massive correction. And so the fact that DeepSeek was developed in China for less money and, you know, has a fundamentally sort of different configuration and blew up some of the assumptions undergirding AI development and trajectory in the US was particularly significant because there is a big question about whether there is a huge AI bubble right now comparable to, let's say, the like 2000s .com bubble. And, you know, I think that's a very real and live possibility. You add to that some of the things we're about to get into, like the housing market still sucks. Inflation now is going back up. Consumer sentiment is falling. You have Trump, who knows what he's going to do in terms of tariffs, the mass firings at the federal government. Like, yes, it's a comparatively small proportion of the overall workforce, but can have huge reverberating effects throughout the country. All of these pieces should make you pretty nervous.